Welcome to ASEAN Business Report, and you're watching it. Today is Friday, the 23rd of September, 2011. You're with us, Anatakon Plodi.
And I'm Weena Jong Prasit. Kunatakon, the past week we've seen some major economic events, including the IMF trimming down the forecast for economic growth, the downgrade of 7 banks in Italy, as well as 3 banks in America. That includes the Bank of America, Wells Fargo, as well as Citibank.
And the world stock markets are holding their breath for the Fed to come up with some kind of stimulus. They were expecting quantitative easing round 3, Kunwina, but actually the Fed had a different thought in mind, which they introduced a new kind of stimulus. Well, actually, it's not new. They introduced this in 1960s already. It's called Operation Twist, twisting their bond holdings, refinancing $400 billion into longer-term maturity treasuries. And the world market's reaction is that stocks plummeted worldwide.
And that includes the stock exchange of Thailand as well. We have figures here about half an hour ago. The index fell 36.22 points to 954. And the trading volume is amounts over 20 billion baht. Now let's take a look at the world index. Stocks fell, pushing the MSCI All-Country World Index of 45 nations into a bear market for the first time in more than 2 years after the worsening European debt crisis and threat of a U.S. recession erased more than 10 trillion from equities since May. The MSCI index has lost more than 20% since peaking on May 2nd, meeting the common definition of a bear market after slipping 4.5% to a 13-month low of 277.38. The MSCI World Index of Shares in Developed Nations also fell into a bear market yesterday, plunging 4.2%. The MSCI Emerging Markets Index reached the 20% threshold on September 13th. The world is poised for a financial crisis, Mohammed El-Arian, Chief Executive Officer of Pacific Investment Management Company, said in Washington yesterday. The Federal Reserve said September 21st that there are significant downside risks in the U.S. economy, prompting the central bank to announce a $400 billion plan to spur growth as the recovery from the worst contraction since the Great Depression falters. The market is pricing in a recession, said Ngek Su Nam, the Singapore-based Chief Investment Officer at Nikko Asset Management Company, which oversees about $154 billion. Stocks are looking cheap, but it will take a lot of courage to believe that things could get worse. The risk of a sovereign debt default in Greece is the most significant concern. The MSCI All-Country World Index has retreated 19.8% since July 22nd. It fell after Standard & Poor's cut the U.S. credit rating following a debate over raising the nation's borrowing limit. Speculation Greece will default intensified, and Chinese inflation accelerated to a 3-year high. The slump pushed the price-earnings ratio for the index down to 11.4, the lowest since March 2009, and 46% less than the 16-year average, data compiled by Bloomberg showed.
U.S. stock slump, giving the Dow Jones Industrial Average its biggest 2-day decline since December 2008. Investors, meanwhile, are concerned that policymakers are running out of tools to avoid another global economic recession. All 10 industries in the Standard & Poor's 500 index retreated at least 1.8% as losses were led by commodity and industrial shares. Alcoa Inc., Caterpillar Inc., and Bank of America Corp. dropped more than 5%, pacing declines in companies most tied to economic growth. FedEx Corp, operator of the biggest cargo airline and a proxy for the economy, tumbled 8.2% after cutting its profit forecast. The S&P 500 fell 3.2% to 1,129.56 points at 4 p.m. New York time, dropping 7.1% in 4 days. The Dow Jones lost 391.1 points, or 3.5%, to 10,733.83 points, bringing its two-day retreat to 5.9%. People are selling first and asking questions later, David Kelly, chief market strategist for JP Morgan Funds in New York, said in a telephone interview. Stocks fell Thursday on the Federal Reserve's assessment that the turmoil caused by Europe's crisis is taking a toll on the economy. The Fed said it will replace $400 billion of short-term debt with longer-term treasuries to spur growth. Stocks also fell as Moody's Investors Service cut 3 U.S. banks. Stock futures extended losses after a Labor Department report showed that more Americans than forecast filed first-time claims for unemployment insurance payments last week.
Asian stocks fell, driving a regional benchmark index toward its biggest weekly drop in almost 3 years. Concern intensified that policymakers worldwide may be running out of tools to avert another global economic recession. BHP Billiton Limited, the world's #1 mining company, slumped 2.8% after crude oil and metal prices tumbled yesterday. Alumina Limited, a partner in the largest global producer of the material used to make aluminum, retreated 1.8% in Sydney. Korea Zinc Company, which produces gold and silver, plunged 10% in Seoul, and Samsung Electronics Company, South Korea's biggest exporter of consumer electronics, lost 2.5%. Tim Schroders, who helps manage $1 billion in equities at Pengana Capital Limited in Melbourne, said the aggressive selling of equity markets seems to reflect heightened probability that the world is moving toward a recession. There's also a sense that policymakers globally are limited in their ability to alleviate the situation because of the need for fiscal austerity. The MSCI Asia Pacific, excluding Japan, index dropped 1% to 375.62 as of 9:48 a.m. in Tokyo. The gauge has dropped 14% this month amid concern Europe's debt crisis is spreading and signs of slowing U.S. economic growth. Japanese markets are closed today for a public holiday. The MSCI index has lost more than 20% since peaking on May 2nd, meeting the common definition of a bear market. Global share declines sent the MSCI All-Country World Index of 45 nations in a bear market for the first time in more than 2 years, after the worsening European debt crisis and threat of a U.S. recession erased more than $10 trillion from equities since May. Now on the line with us, we have Kun Charampon Chotika Satien, who is the president of the Stock Exchange of Thailand. Welcome to the program, Kun Charampon.